Hi, this is Paul with your Bold Profits Daily. This week, I'm going to answer a question that I got all through the market sell-off that went on between October and December. And that question was, hey, Paul, why are you so optimistic when everyone else is telling us that the world might be about to end? The markets are crashing. People are calling for the next Great Depression. Why are you still optimistic? And in this Bold Profits Daily, I'm going to tell you why I stayed optimistic through the fourth quarter of 2018, even as markets were going down in a straight line. And then I'm going to tell you about a piece of data and information that came out today, which is Friday, that shows you that this indicator says that it's still going up, which is a great sign for the markets. And then a sector for you to invest in that will give you direct participation in this. So let's first get to why I stayed positive through that horrendous, horrible sell-off we had in the fourth quarter of 2018. And also, in a related way, why we've seen an immediate snapback. So take a look at this chart. This chart comes from the Federal Reserve. And this chart shows you the 5-year industrial production index. So what is industrial production and what does this index measure? Ultimately, in a very simple way, what it does is that it measures what we make in this country. And if you think about it in a very simple way, ultimately, our economy is measured by what we make and what we create. And if you start to see industrial production starting to roll over, meaning that it's starting to go down like this, it means that we're starting to make less things. And why would that be? It's because we're starting to demand less things. And it's in general because people already have enough. They no longer see any more need for it because their markets are no longer expanding. And as a result, now they're going to stop ordering it. And that has a knock-on effect through our entire economy that eventually ends up in unemployment and all these different places. So for me, the one macro indicator that I always make sure to keep track of is this industrial production index. And if you go back and track it, you can see that over time, industrial production anticipates recessions by some period of time. It's never 1 quarter or 1 month. It's usually in excess of 3 to 4 quarters. In other words, it's a flattening out and then it sort of rolls down. And if you can look and see, you'll see that over the last 5 years, this actually bottomed out in the middle of 2016. And since then, it's actually been going up. And this morning on Friday, we actually got an update that said that industrial production in the United States actually grew by 0.3%. And for the fourth quarter, it was up 3.8%. So if you were looking at the stock market, you would say that probably some number of people really thought that industrial production was really going to go down and sink and might even come as a negative number. And if that were the case, then that would be a sure sign that our economy is weakening, it's in a weakening trend, and there's trouble ahead. So this morning's release said that not only is industrial production growing, it also said that the manufacturing part of our economy is actually growing really strong and contributed 1.1% to the quarter. So that's another great sign because, as I said, it's what we make that is really what generates growth in our economy. The other good sign is that auto manufacturing, which has a lot of knock-on effects to our economy, was also strong. So that's another good sign. So this is the reason why I have stayed optimistic through the fourth quarter. And if you remember, I also made a video telling you to buy an industrials ETF. And clearly that was poorly timed because what happened right after I told you to buy it? It went down with the market because people were fearful that everything was going to become weak, everything was going to be problematic. However, I would tell you that because industrial production is strong, as you have seen from the historical chart, that this ETF is still a buy. Second, with getting the latest piece of information saying that manufacturing is strong, industrial production is strong, and that our auto manufacturing sector is actually back in growth mode, that's another great sign. And I'll also say this, which is that there's early signs that the United States and China want to come to a deal. And with that, you would see manufacturing and industrial production surge higher, and this ETF would take off. So I'm going to tell you that the industrials are a great place for your money, where you can make some incredible money really quickly, especially because industrial production is telling you it's still going up, which is telling you that our economy is still in good shape. The latest update says that nothing's really changed. What happened with the stock market in the fourth quarter hasn't changed anything with respect to what people are doing with their companies in terms of industrial production and manufacturing. Another great sign. Third, there's early signs that a deal is likely coming between the United States and China, and that would really surge the manufacturing and industrial economy. And that would make this ETF, which is the Vanguard Industrials ETF with the ticker symbol VIS. Once again, that ticker symbol is VIS, go up. So that's my bold profits daily for you for this week, which is that the industrial economy, the manufacturing economy, which is ultimately what really matters for overall economies, is still strengthening. It's still going up. And with a trade deal, it could surge higher. And to benefit from all that, you would buy the Vanguard Industrials ETF with the ticker symbol VIS. So I'll have another Bull Profits Daily for you next week. Until then, this is Paul saying bye.